Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about YANCOAL AUS interim report. YANCOAL Australia Limited provides various businesses and services related to coal mining and production. These include exploration, development, production, marketing of metallurgical and thermal coal mine ownership and operation, including plus Moolarben Coal Mine 95% interest, plus Mount Thorley and Warkworth Mines 83.6% interest, plus Hunter Valley Operations 51% interest, plus Yarrabee Mine 100% interest, plus Donaldson Mine 100% interest, plus Ashton Mine 100% interest, plus Stratford Durley Mine 100% interest, joint ventures, including plus Middlemount Mine 50% interest, plus Austar and Caneby Downs Mines, interests not specified. The YANCOAL Australia, ASX, YAL, stock price has dropped by over -10.38% in the past year due to several key events and market conditions. The primary causes include the suspension of dividend payments on August 20, 2024, which led to a significant share price drop of 17%. This decision was made to build a war chest for potential acquisitions, particularly in metallurgical coal assets. Additionally, on March 13, 2025, the stock traded ex-dividend and weak Asian import data contributed to a further decline of 12%. These events have had a substantial impact on YANCOAL's share price, resulting in significant losses for investors over the past year. The primary drivers of revenue growth or decline can be summarized into three key areas. On the decline side, a significant decrease in global coal prices, particularly for thermal coal, has had a substantial impact on revenue. Additionally, reduced demand from China due to its property market slowdown and strong domestic supply, as well as decreased metallurgical coal demand due to lower Chinese steel production, have also contributed to revenue decline. On the growth side, increased ROM production at certain mines, coupled with higher saleable coal production volumes, has led to a decrease in operating costs per product ton. Furthermore, an increase in metallurgical coal sales volume and revenue from key markets such as China and Japan have driven revenue growth. However, it is worth noting that some of these drivers may be contradictory or overlapping, indicating the complexity of factors influencing revenue growth or decline. The company's financial performance indicates a strong ability to generate cash from its core operations. With a net cash inflow of $473 million in 2025, the company is successfully converting profits into cash flow. This positive operating cash flow demonstrates the company's efficiency and effectiveness in managing its resources, positioning it for future growth and success. The company's debt level and interest expenses have undergone significant changes. The total interest-bearing liabilities have increased by $16 million, reaching a new high of $128 million at June 30, 2025. This increase is a notable change from the previous year. Additionally, interest expenses have also risen, increasing by 10% to $33 million in the first half of 2025 compared to the same period in 2024. These changes indicate that the company's financial obligations are growing, which may impact its overall financial health and profitability. The financial performance of various regions and segments has been analyzed. The New South Wales, NSW region stood out as a top performer, with significant revenue growth and substantial operating earnings before interest, taxes, depreciation and amortization, EBITDA. In contrast, the Queensland QLD region struggled, recording substantial losses in both revenue and EBITDA. The corporate segment also underperformed, with an operating loss of $11 million. Management is optimistic about the company's outlook, expecting saleable production to increase to 36.9 MT in 2024, and attributing a guidance range of 35-39 MT for the current year. The company aims to achieve this growth through organic means, utilizing operating cash flows to fund exploration and potential expansion works across its Tier 1 assets. While open to inorganic opportunities like acquisitions, management will assess them on a case-by-case basis. The company has made several key acquisitions and divestitures in recent years. On the acquisition side, it purchased a 3.75% interest in the Moolarben joint venture for $110.5 million through one of its wholly owned subsidiaries. This investment is expected to provide significant returns. In terms of divestitures, the company has sold several non-core assets, including the Donaldson Coal Complex to the Bloomfield Group for no cash consideration. Additionally, it has ceased mining operations at Stratford and is transitioning Austar and Stratford Durrelly to mine closure. These moves are expected to streamline the company's operations and reduce costs. The company has a history of paying dividends. In fact, it has been a consistent practice for the company to distribute a portion of its profits to shareholders in the form of dividends. The most recent declaration was made on August 19, 2025, where $82 million was allocated as an interim dividend at $0.62 per share. This is further supported by the financial statements, which confirm that the company has indeed paid dividends, with a significant increase from $429 million in 2024 to $687 million in 2025. Concerns about inventory buildup and supply chain disruption. The financial summary highlights two significant concerns: inventory buildup and supply chain disruption. The data shows that there has been a substantial increase in inventory levels, with finished goods and work-in-progress inventories rising by $128 million. This is further exacerbated by high period-end stockpiles at sites and the port. Moreover, supply chain disruptions have also been reported, primarily due to rail network outages and restricted vessel movements at the Port of Newcastle. These disruptions have led to a decrease in sales volumes, resulting in inventory buildup. The combination of these two issues poses significant challenges for the company's operations and financial performance. That concludes the financial summary for YANCOAL AUS. Feel free to comment below, and I will be happy to answer them when possible.